Hello and welcome. I'm Ryan O'Donnell, co-founder of OG Private Wealth, and today we're going to talk about the dollar cost averaging dilemma. Really, the question is, do I invest all my money at once, or do I move it in slowly over a period of time? You see, I think right now is a great time to have this conversation because of all the volatility that's out there. And when you think about where the market's come in the last 2 months and where it was the 2 months prior to that, people really have to weigh the effects of, is it time to invest now and risk possibly losing more money if the market turns around? Or do I wait and regret that I might miss out on some of the upside? So I put together a little presentation and an example that I want to go over with you. So let me go ahead and share my screen. Okay, I think you can all see this now. All in, or DCA, which is dollar cost averaging. So before I go into the presentation, let me just briefly explain to you what dollar cost averaging is. So I'll contrast that with just the simple idea of, I'm going to invest my money right now. Now, whether you're a new client and we've just put together an investment plan, or you're an existing client and you came into additional money, let's say you have $1 million and you have the portfolio you want to invest in, you can decide, do I take this money and just put it in the market, put it in the investment portfolio all at once? That's option one. Now, option two is dollar cost average. And what we do there is we slice up that money into, let's say, 20% chunks. So we'll take 20%, we'll put it in this month, and then next month on the same day, we'll put it in another 20%, so on and so forth for the next 5 months until all the money's been invested. Now, when you do that, if the market goes up over that period of time, well, you're better off to invest it now while it's lower and take advantage of the increase. On the opposite side, if the market drops, you'd be better off to invest slowly over that period of time. So that's the difference there. So I got some examples in this presentation I'll walk you through, but let's just look at why I think now is a great time. Okay, so if we look back to sort of the beginning of the year, when the market was somewhat stable on an upswing, people were feeling pretty optimistic, and you could have said, well, we'll just go ahead and put it in. We'd have this same conversation, but it would have been easier for someone to just invest and kind of go along with the ride, knowing that the dips were small. Then February hit, and the market suffered a huge downturn over that short period of time, 35 to 40%, depending upon which index you looked at. That's huge. So down around this period of time, if you could have invested then, that would have been great. You would have seen about a 35% increase in value. Life would have been great. You would have been feeling very proud of yourself. But if we're sitting here now, I think there's a lot of anxiety for investors around what comes next. And if you're sitting on money now trying to figure out what to do, it's probably a lot like it was back in the spring of 2009. This is a very similar pattern. And many people, and we don't know what comes after this. Hindsight's always 20/20. And I think people would have said, well, of course you should have invested then. Well, that was a scary time back then when we thought airlines were going bankrupt. We thought all the cruise lines were going bankrupt. Now, we're not out of this, this financial crisis or pandemic or whatever you want to call that. But I'm just saying, where do we go from here? If we invest all at once and the market drops back down to where we were, you're going to feel that loss. And you're probably going to kick yourself in the butt for not dollar cost averaging. On the other side, if the market continues to rise like it did in 2009, you don't want to miss out on the next 300% increase over the next 10 years. So I get the anxiety around this question. So let me walk you through sort of the conversation that we actually have with clients when they come in the door about whether or not you should invest at once or dollar cost average. So it comes down to two things. One makes more financial sense than the other. And one, I think you will have a better emotional experience coming out of it, a better investment experience, if you will, not necessarily tied to the finance. So let's go through this. So you have $1 million to invest, and you have to decide, do I dollar cost average or do I invest it all at once? Now, if I'm dollar cost averaging, I'm going to take $200,000 a month, every month for the next 5 months. And I'm going to assume two models, one where the market goes up and one where the market goes down. Okay, 10% per month each way. So in an up market, you can see here that I make about $610,000 by just investing my money all at once. On the other side, if I dollar cost average, you're going to see here that I make $343,000. I missed out on a $267,000 in missed opportunity. Now, you still made money, so you're still happy, I believe, but not as much as you would have made. In a down market, you can see here, if you invest all at once, you actually lost $409,000, as opposed to dollar cost averaging where you lose only $262,000. You lost less $146,000 by dollar cost averaging, which means you came out ahead in that scenario. So if I look at these two scenarios, put them side by side, you can see, well, I have the fear of missing out here, but I have the actual pain of losing money. And I can tell you that in the short term, when it comes to stock prices, there's a lot of noise out there. It's very unpredictable where stock prices will be tomorrow, next month, even next year. There's a lot of noise out there, a lot of uncertainty. See the pandemic. Stocks were doing great this year until February, and then the unexpected happens. So in the long term, I believe stocks have a positive have a positive return and will go up over time. In the short term, it's really, really hard to predict. So if I take that knowledge and I know, well, in an up market, I'm better off to invest all in. In a down market, I'm better off to dollar cost average. It's a 50-50 chance on which one is going to turn out better over the next 5 or 6 months. But when I add in the fact that we expect stocks to have a positive return over time, after all, why would we invest? Then we have to say you're better off financially to invest all at once. Okay? So the financial answer is you should invest all at once at any point in time, because it's a 50-50 outcome look on whether stocks will be positive or negative in the short period of time. But over long periods of time, we expect a positive return, which means we expect a positive return every day, even though that doesn't happen. So knowing that, the financial decision is to invest all at once, the real issue then is, why would you not? And that's because I think you will have a better emotional experience by investing over time, by dollar cost averaging. You see, the way that we react to missed opportunity or the regret of missing out is a lot different. It's less of a feeling than if we actually lose money. Okay, that's a very important decision when it comes to building a financial plan and sort of giving you advice, because I want you to have a good experience as an investor, because if you do that, you will stay disciplined. You'll stick with the investment plan that we developed for you, and you'll have a better long-term outcome. So, there's always two sides of the equation. We spend a lot of time getting to know you as clients, because we want to make sure that when we're making recommendations to you, we're sort of putting ourselves in your shoes, aligning those recommendations with your values and your goals. So, while the financial decision on which one's better financially, yeah, we can tell you that, but that doesn't mean that's exactly what you should do, because in more cases than not, I recommend people dollar cost average in over a period of time. Now, not everyone wants to do that, but certainly, when you weigh the emotional versus the financial benefit, I think it's a better thing to do for a lot of people. So with that, I hope everyone's staying safe and doing well. And if you need anything, feel free to click the link below this video to schedule a quick call with us. Thanks a lot and have a great day.